and happy to take your questions along the way as we do this. I got about 15 slides for you that will talk about the impact, as well as what we see coming up after the impact, what was going to get funded, what are the new investment theses as well. So what I'd like to do is, if you have any questions, use the Q&A box to post them. As they come to your mind, go ahead and put them up there, and we'll take a break between the slides to answer your questions as well. Again, we'll record this and make it available afterwards, so sit back and enjoy the slides, and let's think about what we can do to make our way through the coronavirus crash and how we can keep our startups going and what we might do with those startups on the other side as well. So with that, let's go ahead and kick off into the slides. So as we know, the coronavirus has taken a 10-year bull market and then now turned it into a bear market. Everybody's aware of the market and how it's been changed dramatically from what it was before. And there are many comparisons with 9/11, the 2008 financial meltdown, and even the Great Depression. People standing in line for food, back to that time that we see today. And so startups and investors are adjusting to a new way of life. We're calling it the new normal. As we get back out of lockdown and into our everyday life, it's going to be a different life for sure. It's been changed, and it's important to deal with that. And from a startup's point of view, times like this call for entrepreneurship and innovation. And so it's important as startups and investors that we're contributing to the new normal as best we can, because there's going to be a lot of new things coming up that can be good opportunities for startups and investors as well. So after the investors adjust to their newfound portfolio status, what we're going to see is investors will again re-engage in startups. Right now, our investors are, in some cases, distracted by the gyrations of the stock market. In particular, angel investors and family offices are watching to see where it lands. In informal surveys, what I'm finding is about 70% of our angel and family office investors are doing business as usual, 20% are slowing down, and 10% are stopping because they're just waiting to see where the market ends up. On the venture capital side, if they've raised funding, what we're finding is that they're continuing business as usual because the money's raised, it's in the bank, and they're continuing to deploy it as they will always. In fact, many VCs find that, for good deals, they're actually writing more term sheets and checks today than they were ever before, because a lot of angels are distracted. So it's not the case that nobody's investing; they are investing. And so what we're finding is that we're going to see that many investors are coming into the market because they want to also find a good deal. And they're also coming into the private market space where startups live because they're tired of the gyrations of the public markets. And so they're looking for good private companies with solid growth prospects. One thing's for sure is valuations will come down. Before the COVID economy hit, Crunchbase did a report and found that most investors thought the valuations were 30% over and above what they should be before the COVID economy. And so when the market downturns come, valuations get reset back down closer to reality. And we will see that. In 2008, they were reset down by about 20%. And then what you'll find as a startup is that it's going to take longer to close sales, especially if you have big ticket items, you have recurring revenue, annual contracts. Customers are going to take longer to make decisions, and it'll be slower to sign up. And this is going to make it harder for startups to tell the growth story to investors, who will be increasingly looking for solid, sure thing investments, because quality or demand for quality for startups is going to go up as well. So it's important to adjust your fundraise strategy accordingly and move to a more conservative growth plan, because it's going to be harder to grow a business, with the exception, some are just well positioned in this market and are taking advantage of short-term market dynamics. And for them, we'll talk about how they should play this near the end of the presentation. So with the coronavirus economy coming on us, what we found is that it was not so much new things that were happening, but it was accelerating certain changes that were already underway. And we'll talk about those here in a minute. And so in the supply chain, what we're finding is that there was a shift of delivery straight to the home, and not to individual retail or grocery stores, but direct to the home, and that there were suppliers hiring thousands of workers to meet the acceleration. And we're seeing this now with Amazon and other groups hiring literally hundreds of thousands of people to help with the delivery to the home, because while that trend was been underway for over a couple of years now, it's accelerating very dramatically right now. We're also seeing shift online for education, for physical training, and for education. And so what we're seeing here is that there's going to be more and more a shift to remote worker, and there's going to be a greater utilization of collaborative software and distance learning tools that are out there. And then in the healthcare industry, as we saw with the overload of the hospitals with coronavirus patients, there's going to be an increased usage of telehealth systems. We've been using these systems for many years, and we'll talk about them more in detail here today. So what do you do? As a startup, you need to recognize this acceleration and move your startup to be a part of it. Startups, especially the early stage ones, are nimble. They can pivot. They can readjust their strategy very easily. You don't have huge teams or huge commitments already, and so you're in a very good place to start taking advantage of what the new normal will bring. Because essentially, when we get to these market crashes, so to speak, what we're really doing is just resetting things back to what companies are really worth, both on the public markets and the private markets. We're giving a new set of care abouts and a new set of investment theses to the startups and investors respectively. And we're saying, let's go again. We had a great 10-year bull run. I think we're going to get another 10-year bull run. Given all the technologies and the opportunities, I find the coronavirus to be also a great impetus to move forward in the directions in many ways we were already moving. And so what we're going to see is increased use of remote workers. So as a startup, you may want to think about making use of that. If you're spending money on a building office and so forth, think again about perhaps giving up the office and applying those funds elsewhere, such as marketing. And then you will see people moving to webinars. So instead of doing face-to-face meetings with clients, think about trying to log on and do more through the video conferencing tools, because after this, you're going to find that people are going to be much more open to that process. And you'll find that there's going to be fewer people that are going to want to spend time commuting and driving and so forth. And meetings will be shorter. In a physical setting, most meetings were scheduled for an hour. In the teleconference setting, most meetings are scheduled for half an hour. If you're in a larger group meeting, they could be longer. So as you shift your business online, you need to conserve cash. So if you were offline with your business, and we have many companies that were offline, they're now moving their content and their engagement online. So you want to start thinking about this, and you'll find that it's actually a very different economic model itself. So the next thing we'll see is that many companies are going to see a greater demand for their products in the consumer product goods space. You're going to find there's a tremendous demand to buy products that are shelf stable, those that promote wellness, and there's a shift from restaurants to grocery stores. And so you're going to see a bigger demand in that case. You're going to see a lot of outages of preferred brands, and if you're an up-and-coming brand, you'll find your product being picked up because it's the only thing left on the shelf. And so you're going to find new customers coming out of this market because there's more people that will be trying what you have just because you're available. If you're trying to get into the big box retailers or the grocery stores, you're going to find in some cases you may be delayed because category reviews and store shelf resets are delayed for new products because they're busy just trying to keep current product on the shelf and adjust to the new demand that's now presented with them. So it's going to take longer to get new products out there if you're not already out there in that marketplace. In the healthcare, what we're going to see is that there are many new tools that are coming in, and COVID-19 is going to accelerate their adoption. Telemedicine has been around for quite some time. There have been many apps and tools available. What we're going to see now is that after years of using the mobile phone to talk to one another. The population, for the most part, is fairly familiar with it. And there's going to be a demand or an increased use of it for talking with your medical provider. And you don't have to go in for a meeting or a face-to-face visit as much as you did before, because hospitals and doctors are shifting to make more use of these tools. Because as we see in the coronavirus pandemic, if there is an outbreak, there's no way everybody can go to the hospital at the same time. And there's going to be more and more a shift to healthcare to the home. Everyone stays home, and through telemedicine, you get to interact with your physician. You also see a tremendous amount of use of AI. There's a tremendous amount of data that comes out of the coronavirus economy as far as the data for, pull this back up, whoop, hold on, go back. Let's get back 2 slides. It's going to be, AI is going to be used to manage all the data that's going through clinical trials and all the data that's going through controlling the pandemic. We're going to see more use of those tools because there's just a huge amount of data that has to be combed through, and this is a great opportunity to see how well it performs. And the third thing we'll see is an increased use of personal monitoring devices. Everyone has an Apple iWatch and they use it for various things. As we go forward, we're going to see more and more dependence upon those tools because they're very low cost. They're always on, they can send out alerts, and they can take the place of what doctors and others have been doing in the past from the point of view of just understanding what your current condition is. So it's going to be interesting to see how those go forward as well. In the manufacturing and automation space, what we're going to see is a new shift to flexible systems to build necessary products. I think we're going to see manufacturing in general will shift back to the US to provide a secure supply chain. Companies will trade off low-cost labor in order to get it. There was a real concern about security and supply when half your product is coming from other countries that are also under pandemic. And there'll be moves to secure that chain as best they can. And then there's also going to be the effort to increase automation to replace workers who may be in quarantine. If a worker is available, that's great. If they're not available, there are critical parts of the supply chain and essential services that need to be done. And there's going to be more automation brought to bear upon it. We'll also see a lot of use of 3D printing, robotics, and automation systems to provide the basic infrastructure that's out there. Right now, you see robotics used primarily on the back end final assembly, but I think going forward, you'll see robotics used throughout the entire manufacturing process. If you need to create products or build products at huge scale, you absolutely have to have robotics and automation to do that. There's no way you can do it manually as well. And then in the cybersecurity world, what we're going to see is because there's a shift of employees from centralized work to remote work, there's going to have more people logging in from these remote locations. And this, of course, provides more opportunity for cybersecurity attacks. And it's important to monitor the data wherever it is stored, even if it's at a remote location. This is a big challenge for security systems out there now because most kept data on their own premises and their own servers. But when workers are working remote, you now have to deal with that. And then in particular, tools like collaboration tools were built to be easy to use, which means they're easy to attack. And so you'll see a lot of effort going into putting encryption tools into collaboration and messaging tools to protect data, privacy, and other issues. Great opportunity here for those in the cybersecurity world as you have a brand new paradigm to work with. And then next, you're going to see at the government level, we're going to see the government shift to building out infrastructure and response programs for healthcare and public safety systems. They're going to start stockpiling medical supplies and equipment for potential follow-on scenarios like we've just gone through. And they're going to declare certain industries as strategically important, which means they're going to get funding and priority over other things out there. And they're going to move to provide more support for workers that are available. Those who do not have employers or full-time employers, they're going to start looking for setting up structures of support for those workers. And then next, we're going to see in the sports world, for example, while physical events for sports have been canceled, esports continue with online activity. If you haven't checked back into esports, you'll be amazed at how large it's grown and how fast it's still growing, and it's not slowing down, especially in this COVID economy. Some of the things you'll start to see is that many major sports teams are going to start to create virtual versions of themselves, not so much that they want to shift their work online, but the fact that that's where the money is, that's where the sponsorships are, that's where the branding is, and for mind share and branding and sponsorship opportunities, you're going to find this is going to attract the traditional sports teams for sure. And so, again, you're seeing that just because physical sports may continue without an audience, everybody will be watching those basketball and baseball and football games on TV, that's fine. But you'll see that esports is going to take over as the audience continues to grow in their structure. And then those that have been through quarantine know that if you have more time on your hand, you end up playing more of these esports games and engaging with them. And so it's increased the amount of activity that's gone in there for sure. And then software development for games carries on with remote workers. A lot of game studios will move to a remote worker situation, so you can continue to work without it. And then you're going to see more. Back one. More. You can see an accelerating shift to online sports, and some will create virtual events to showcase their games so that they're going to have a physical game but try to display it in a virtual setting, because that's where the larger audiences are grouping at this point. So let's go on. So who is still investing? So right now, early stage investors are continuing to move forward with their investment plans. These are pre-seed, seed, and Series A investors are continuing on as they would before. And that's because the seed actually have an advantage in these changing of economies. They don't have large employee bases. They don't have large customer pools. They have a little bit of each, but not a lot. And so when the COVID economy shuts down the market and the economy for a period of time, they're not as at risk as much, and they can more easily pivot. And if you're a later stage, you have more to risk. And so what you'll see at the later stage investors is that they're putting many of their investments on hold because they're usually investing larger amounts, 5, 10, 15, 20, $30 million. And so they're waiting to see how the economy sorts out for that. And then other investors are moving their investments into the higher quality deals with stronger traction. So they'll continue to do it, but they're going to be more picky about what they invest in. And lenders in the market are continuing as always with their same criteria. There's no change there. You can always get a loan. And so what they're investing in, as we talked about in this COVID economy, is they're going to shift to things that are essential goods and services. We saw tremendous uptake in cannabis deals and alcohol deals, as well as in AI and robotics and automation tools and collaboration tools. Those are all essential goods and services, and so they're getting a lot of attention from investors. Those in the wellness categories we talked about are doing well. Fintech gets interest where there is contactless payments. I remember seeing a photograph in the early days of January when the coronavirus was just beginning in Wuhan, China. There was a man sitting at a desk in China with stacks of cash all around him, and his job was to burn the cash. And the reason is that cash spreads contagion. And so in a coronavirus economy, you don't want cash, you want contactless payments. And so we're seeing a lot of activity in that direction. How do we get rid of the use of cash in this time? And then biotech, obviously, they're looking for vaccines, they're looking for protections and of various types, and looking for tests. And those that are in that space are seeing a tremendous amount of interest. Remote work software, healthcare, health tech are also getting a lot of interest. In supply chain, we've seen a lot of interest in supply chain visibility systems. We've seen a lot of interest in actually putting everything on the supply chain. Blockchain is a great tool for that. See a number of systems coming up in that direction, and seeing people tie automation to it with robotics and AI. That way you can work with a minimal number of people in the time of a contagious outbreak. So I get the question a lot is, should I change my strategy? Should I raise funding? Is now the right time? What should I do? So for startups, what we want to say is there's three buckets that we put up here on the screen. And the first is, if you have strong demand, about half the companies I work with are seeing tremendous demand because they were just well positioned and the COVID environment accelerated what they were doing. So if you have strong demand and you already have funding, then now's the time to seek market share. If you do not have funding, then now's the time to go raise funding, but come with a growth story. And so if you have strong demand, by all means, consider funding if you need it. Second is, if you're not seeing strong demand, but you have a good solid cash position, you're doing okay, well, now's the time to sit down and really focus hard on your product, build a stronger relationship with your current customers, and just spend more time building your internal processes and so forth. Because the customers are going to do what they're going to do, and it's time to just make your company in a better way. And then if you don't have strong demand and you're not seeing the uptake in funding that you might want to get, then what you need to do is cut expenses and move to profitability. It'll be painful, but it's a way to live another day, to fight for another time. So if you're in that position, then consider cutting staff, cutting products, cutting back to the core, and carrying on, and just get to break even or a little bit of profit to carry you through, as we may be going through this another time or two again. So those are things to look at as well. So the next thing we want to look at is how to COVID-proof your business. After the COVID-19 pandemic, investors are now asking, is your business COVID-proof? So you want to make sure that your startup can continue day-to-day operations even if they cannot come into the office. You need to set up remote work tools to use, if not permanently, but when the time arises. Next, you need to update your cybersecurity plans, because you're going to have computers and systems and data sets no longer on premises. They're going to be in remote locations. Finally, you want to create backup and redundancy plans, so if someone falls ill or is not able to do their work as expected, someone can take their place until they're able to do so. And then in addition, you want to look to see, are your partners COVID-proof? Are the ones that are working with you and providing additional tools, are they working well in this environment? And then you want to look and find customers who are COVID-proof, because it does no good to make yourself COVID-proof if half your customers are going to go away in these economies, leaving you without half the revenue. You want customers who can continue as well. And then secure the supply chain for your operations. Make sure whatever tools you need, you've got multiple resources, you have contracts, and you have other things in place to make sure you're in a good position for it. So those are the key presentation topics we had today. For those who have questions, let's see what we've got here, and love to answer them. Go ahead and fill them in at the Q&A box at the top, or go ahead and put them in on the chat box that's up here as well. And we'll be glad to get those answered as well. So I have a few questions here already. You think the valuations will go down by 30%? Why not more? And I think the answer to that is, I look at what people thought the market was worth beforehand, and they thought it was overvalued by 30%. So I think 20 to 30% is how valuations will go down. Coming out the other side, there's still a lot of great things going on in the economy. A lot, that company's technology that they had before, they still have now. In most cases, the team they had before, they have now. And so there's still a bright future for many of these companies, and they will, do well going forward. The other thing we get into is that, some parts of the country have had highly overinflated valuations. You see this primarily on the West Coast in the Bay Area, where people had a little bit of revenue, but they were worth $20 million in valuation. And they're the ones that are going to have to come down probably more than 30% because they were well above the 30% threshold. Midwest and East Coast, the valuations never got up so high, so it doesn't have so far to come back down. So I think it depends upon where you're based and what valuation you were asking for before and how you can do that now. If you were looking for a later stage round, Series B or C, I think you need to step back from the fundraise, work on getting to some sort of profitability mode, because I think you're going to be up for some potential down rounds. But if you can grow organically for a year or two, get your revenue up, get your KPIs in shape, you can potentially avoid the down round and raise money at the same or a little bit higher on the next round. But I doubt that's going to be in the next 30 or 60 days. You have to be in a place where you can continue on, so cutting costs would be a key thing for you guys. If you're doing a seed in Series A, by all means, I think you should continue as always. I don't think the valuation may have gotten too high on your deal, and you can probably continue to raise if you have a strong growth story. Let's see what other questions we have here. Let's see. So we talked about various applications that are coming up. What new applications do you see coming out of the COVID-19 economy? I think what we're going to see is not only an increase in automation tools and robotic tools and supply chain tools. I think what we're going to see is a new category where you take all of those and they work in concert together. Right now, those are three separate categories, but I think what you'll see in the next 10 years is that there's going to be a combining of those three things in order to create the efficiency and the cost that people want. I put systems together before in these areas, and I tell you that if they're all different, you spend so much time tying them together that to get the gains people want, they're going to want to see a provider provide a turnkey system that provides all of those elements working together. That's one thing I think we'll see. There'll be other things to see out there as well. I saw a great opportunity the other day where I've heard AR and VR is converging. And I saw a group that was actually taking a Zoom and tying it to a VR system. And you can start in Zoom and then with your person you're talking to switch to VR and then back to Zoom. And I thought, that has a lot of possibilities. You can do a much better job at education and training and others if you're able to switch from one mode to the next seamlessly. Right now, those are really two separate things. One's AR, one's VR, but if you put the two together and can move from one to the other, that gets to be a game changer. I think we'll see that as a new category come up as well. Let's see. I think that's all the questions we have right now. I want to thank you guys for coming out today. Appreciate your taking time. And if you like, we'll send you a recording of this when we finish, and appreciate your taking time. If you're looking to talk with us about your fundraise, by all means, contact us at the email up there, info@10capital.group, and we'll be glad to get back in touch with you to talk about your fundraise. If you're looking to invest, glad to talk with you about how your investment thesis may be changing in this area and what you can do as well. Appreciate you guys joining today, and stay safe out there in this economy, and we'll close it for now.